You're listening to the Homeboys podcast, recorded in our Indiana office and with combined 40 years of experience. Here's your hosts, Clint and Scott.
Hey, real estate investors. You're with the Homeboys and the Homeboys podcast. My name is Clint Wetherill. I'm here with my very talented co-host, Mr. Scott Adams. How are you, buddy?
Couldn't be better. How are you doing?
Doing great. We've got an exciting show today. The real estate market is on fire.
It's crazy.
So we are talking about if we are in a real estate bubble and if that bubble is going to burst and our personal opinions on that. Real quick, see that subscribe button down there? Just give it a little tappy. We love providing this content. We've got over 40 years of real estate experience, a lot of funny stories. My stories are 1/10 of what this guy's stories are. You want to listen to him, but
that just means I've made 90% more mistakes than you.
No, they're just better. Yeah. But anyhow, we're excited that you're with us today. So you're the guy that I turn to whenever I have real estate questions and need advice,
and vice versa.
As everybody is, you're a very charming guy. Mm-hmm. So, Mr. Adams, are we in a real estate bubble? And if we are, what does that look like? When are we coming out of it? When's it going to burst? Should we be running for the hills and buying gold and silver and, buying generators and guns and ammo? Tell us, Mr. Adams, the wise one.
As you know, I have been buying a lot of gold and silver and generators and food and guns and ammo, but I'm not doing it because I'm scared of the real estate market. I do it because I like all of those things, and I'm a ridiculous.
You do like guns.
I do. I'm a ridiculous human being.
You've got a gun right over there behind the camera. I'm looking at.
Oh, quality.
Excuse me. Before we do this podcast, let me set my Glock down.
Oh, it's so ridiculous.
I like it though. We're going to go out and do some videos at properties here in a little bit. I'm glad you're packing heat.
Yeah,
we live in a crazy world.
Yeah, we do live in a crazy world, and kind of
speaks into this bubble.
Yeah, the world is crazy right now. But you and I talk a lot, and you give me a lot of credit with coming to me for answers. You and I basically go to each other to see how each of us feel and
life in general.
Yeah, yeah. But
you're my psychiatrist,
right? Office shrink.
That's right.
But I think we both agree that there's a bit of a bubble going on. It just has to be. When you're seeing inflation or appreciation in markets like ours at such high percentages, and then you look at the coasts, it's just crazy. It's unsustainable. If you don't have to be a genius to draw a stick line at say 20% appreciation and see that before you know it, no one can afford a house. So. It's unsustainable. And there's a lot of other factors that go into why this is a bubble and why it won't last. I think the bigger question will become, what happens after and what you should do during to prepare for that. So, you agree, right? You feel like this is a bubble.
I'm a glass half empty guy.
Yeah, you are.
I just, especially when talking with the economy, I think if we talk about life in general, I'm a glass half full, but the economy, I'm always a glass half empty. I think the Great Recession made me, a market pessimist, and I've been a pessimist, for the last 5 years.
Right. Well, if you look at our timing, we were young men then, just having, really saved and sacrificed in order to build our savings, especially you. You were a saver from a very young age. Right out of college, you started saving heavily instead of living big. So you made the sacrifices in order to build a big savings account, and then it got wiped out.
It evaporated.
You're right. Everyone else around you was living big. Mm-hmm. You were doing the right thing, living conservatively, well below your means and saving, and you got rewarded with being wiped out. So,
and I don't, I'm not a guru guy. We talk about that on this show all the time, the people pulling up in Bentleys and, all the silliness. But if I was listening to any gurus, I kind of fall in line somewhere with Dave Ramsey and Robert Kiyosaki. Those are the two guys that I kind of, that I listen to. A lot of the guys I just think are just, I listened to a podcast yesterday on my way back from Southern Indiana. One of the biggest real estate agents in the world, and just I wanted to kick his ass.
Right.
I mean, I really, wanted to call him up, and it's just the douchebaggery was just crazy. But anyhow, getting back to the bubble, I just don't see why people why the owner occupants are flocking to buy houses the way that they are. I mean, I get interest rates are low, but I look at the cost. I mean, a lot of what's available here is new construction, and they're having to wait forever to
right.
So when lumber prices
you say a lot of what's available here is new construction, it's because there aren't many listings that are existing houses.
Oh, you're seeing real estate agents, they've got this big pool of buyers, and then they go to the MLS for existing homes. There's nothing to sell them.
Right.
They're not interested in the massive remodels that we do. I mean, there's nothing there. So
we have a traditional brokerage that's pretty hefty. It's a large traditional brokerage full of realtors and very high performers. And the two highest performers came to us and said that they are turning down buyers.
Correct.
They are turning down buyers that come to them and want to buy houses. And you're looking at these building materials up 300%. I'm in the market to build a home. I'm not building anything. I was at a local hardware store, not local, Menards, right.
big chain. But I ran into our contractor salesman, Bob, this morning at 6:00 this morning, and he says he doesn't see prices going backwards for the rest of the year. So it's just if I was in the market to buy a home to live in, I would not be going new construction when building materials are 300% higher. I think that at some point, even as dumb as our world is, as dumb as the consumer is in the United States, surely that's going to stop. People are going to finally get that it's not really a great time to be building, new construction.
These interest rates, the way of the world, and there's something that I deeply disagree with the way that Americans live and the way that Americans are taught to live. In our grandparents' generation, and in some ways the way your dad operated was you save up until you can afford to buy the thing that you want. Okay, so you go without. And it became very popular to do it the opposite way, which is to borrow from the bank and pay the bank over time plus interest in order to have what you want now in advance. And I understand that desire. I've gotten a mortgage on my own personal home. However, that has become the status quo. We have someone that you and I both know who has too many toys, and they shouldn't, because they can make payments on them. So they buy their toys even with financing. And it's just a dangerous way to live. However, when you see interest rates like they are, as low as they are today, it really does spur on home buying. And then you mix in the what we went through with COVID over the last year and a half, and people's homes became where they spent a lot of their time. So I understand the demand. I understand what's driving this. And do you feel that this is different than the 2008 drive up?
I think there's no doubt about that. It's 2008 real estate, or let's even go backwards a little bit. 2005, 6, real estate was good, but nothing like this. This is just bonkers. It's, are we in a bubble? Absolutely. I think that we are without a doubt in a bubble. And do I think it's going to burst? Yes. I think it's going to burst. These are opinions. But I don't think it's going to be anything like we saw like in the great, recession of 2008, 9, and 10. I don't think it's going to be something that substantial. I don't think. But I do think that there's going to be some sort of straw that's going to drop that's going to start sending the economy the other way. What is that? I have no idea. Bears and Stearns collapse in 2008 was kind of what you could say set that off. And then you had the Madoff scandal, and you had all this, and then the market just went into free fall. I don't believe that's going to happen. But I do think that there's going to be a straw that drops that sets our market to go back, the other way.
Yeah, I think that you don't have to be a financial wizard to look at charts and see that this is unsustainable. The current rate of appreciation is unsustainable. So what does that bubble bursting look like? Well, fundamentally, we're much more sound than we were when in the last bubble. So does that mean that the chart just evens out and flattens, maybe does a little pullback? I think that'll depend on market by market, a lot, as it always does. But the markets that have that 100% appreciation over the last few years, it's just not possible to sustain that. It's just, it goes against every piece of logic anyone, with half a brain has. So it's just a matter of when and what happens exactly. I think with the fundamentals being a little more sound, it'll be a much softer pop, but we do see a pop coming, and we think that people can take advantage of that and still succeed knowing that's coming. You and I talk a lot about being able to survive and succeed in any market conditions. And we've been through a lot of different market conditions. In fact, during our careers, it's in some ways been the most volatile market, ups and downs that anyone's seen in generations. And we've been able to find success through all of those different ups and downs. In particular, what did you do when 2008 happened? I mean, I think that's a very interesting story. And if people don't know, it can be a real brief story.
It's evolve or die.
Yeah.
And I've said it a few times before on earlier podcasts. Our for sale signs got switched out with for rent signs. Yep. And we became, I became a property manager overnight, and then you and I merged not too long, after that. But, we're going to see, I think that there's going to be a pretty big exodus in the job world centered around real estate and salesmen.
Yeah.
Because we've heard it within our retail brokerage that, I've got 20 buyers. Does me no good.
Right.
Because there's nothing to put them in. And if there's a home that fits their criteria, they're going to be in a 15 plus offer situation where you have to go over list. So, imagine if you're a first time home buyer, this is going to be really interesting. You're a first time home buyer and you come to me wanting to buy, a home for you and your wife to live in. Okay. Mm-hmm. First time home buyer. Me, the real estate agent, is going to say, okay, great. Thanks for coming to me. I'm going to help you find your home. When we find a home for you, we're going to have to go 10% over list price. Mm-hmm. We are going to have to waive the inspection. Mm-hmm. We're going to have to pay for the seller's taxes. We're going to just take that over, and the closing costs are going to all be on you. Mm-hmm. Imagine what first-time home buyers are listening to from the real estate agents. That's reality.
Right.
I'm not just exaggerating. That's what, if you were a first-time home buyer, that's what I would tell you, because I don't want you wasting my time either. If you're not willing to do those things that I just listed, there's nothing I can do for you as a real estate agent.
Well, this might not seem as shocking to folks on the coast, though, because they've had this experience before. Mm-hmm. But for the middle America, this isn't how real estate works. It never has. It never, I don't think, should be this way. But it's just a unique environment.
But what if I told you that?
Yeah.
What if I told you, what would you say?
I'd say, okay, see you later. I'm not buying.
Correct.
I had an HOA meeting last night that you know about, and
you're on the board.
Yeah,
it's hilarious to me.
Yeah,
I want to know if we could actually get footage of you at the HOA meeting that we could put into.
Oh, I told my wife it's literally like being in a SNL skit. Like it's a Saturday Night Live skit.
I just can't picture it.
The people are straight out of Central Casting. Like. There's someone who wants to quit over $150, some sort of, I don't even know what the game's called. Mm-hmm. It's called like Cha-Cha or something. It's some kid's game, $150. Our budget each year annually is about $270,000, okay, for the HOA, for the neighborhood. $150 made her want to quit over these people wanting to put that in.
And you're taking your time out to do this. But anyhow, what
there's dam. I'm trying to help because we live on a lake and there's a dam issue. And I mean the thing that holds water. It's a dam issue. It's a dam issue.
Yeah.
And I'm right by the dam, so I'm only involved because I want to try to help.
Where do you get any dam bait?
Yeah. Yeah. What was I saying? I've lost track now.
No, it's you were talking about at your HOA.
Oh yeah. So they want to outlaw rentals, which I understand. A lot of people, there's a bad connotation that comes with rentals. But my thought was, that's fine right now, because if someone has to move, they sell their house and they got $1 million. I can't believe
that's even a conversation worth having right now.
It's not
in your neighborhood. How many rentals are there?
That's what I said. This isn't an issue.
There's one in none. 600 homes.
Yeah, because you've got houses for $600,000-$700,000 that rent for $1,900. The numbers don't make sense. I mean, it's not a rental area. The numbers don't work. But in a market when there's a pullback, and someone like me who doesn't have to sell their house to buy their next one, you're forcing them to sell it if the market's down.
Right.
If I have to move, for whatever reason, if someone has to move for a job change, you're forcing them to sell it in a down market because they can't just turn it into a rental. So,
we've been through those down markets
correct.
Where you're dumping that price, in order to move it.
So the reason I bring this up is because, there will be a pullback, and it's just about positioning yourself to get through it. It's positioning yourself in areas where it's not going to be as hard hit, and it's about positioning yourself, based on market values versus these higher appreciating areas. So there's still a way to succeed through this. There's easy ways.
Let's break it down. We've got owner occupants and investors. You and I both own our home.
Yep.
And we're both investors, so it's going to be easy to talk about. And you've already alluded to, if you were in the owner occupant market and I told you those criteria that I mentioned earlier, you'd tell me that I'm no longer in the market.
Correct.
And,
I do not believe now is a time to buy for owner occupants.
I couldn't agree more.
Right.
So just to summarize the owner occupant world, if you are wanting to sell, and I want you to tell me your opinion on this.
Sure.
If you're wanting to sell, great time to sell. Sell away. But then after you sell, go find a place to rent until the market comes back the other way.
I think it's the only thing to do right now, and that's on the individual level. So, as far as real estate goes, for someone who's their personal residence, now is the time to sell. And instead of buying to replace it, I believe you should rent, bite the bullet, and wait for a market correction.
Right.
That's on a personal level.
I agree.
So let me ask you this next one, which is, okay, prices are also high. So why would I buy an investment property then?
I'll come back at you with a question.
Okay.
What is our average sales price for a home to our investors?
I would say it's $150,000 or just under that.
Okay. And we always advertise to our clients, not advertising, nationally or on any through media, that we only work in good properties in good neighborhoods.
Correct.
So in today's market, a new home is, for a starter neighborhood, let's call it $275 ish, right? On the bottom end.
For sure.
Bottom end.
I think that's true across the Midwest.
Right. So, and you're looking at, really 300 and above, call it. So as far as investors, you are still seeing, when our average sales price, good properties in good neighborhoods, is 150, and the starter homes that people are getting into now are 275. There's still a gap there that still makes sense, from a value, standpoint.
It's a great point.
If you're coming with a loan, which most of our investors do come with a loan, we believe in having teeth in the game. We don't believe in 100%, 90%. We always like to see at least, 20% down payment. But if you're coming with a loan, interest rates are still very low, so it's attractive. So for people that are investing in real estate, the opportunities are fewer because the market is so hot and owner occupants are gobbling up a lot. But for people like us that provide homes for our customers, we're buying homes that need massive rehabs.
Yep.
Massive. $50,000, even $75,000 rehabs on a $150,000 home. A lot of times we're great at it.
Yep.
We've been doing it for a long time. We can facilitate that, for our clients that still make that value, worth it when you compare it to what is the rest of the owner-occupant world doing. So I think if you're an owner-occupant, I think there's very little opportunity in purchasing anything. However, I think that if you're an investor, through the things that we can help them facilitate, I still think that there's opportunity. The reality is we don't have a ton of homes to offer people. We've literally
they go overnight.
We have a property available, and that's because we just bought it.
We sold. I believe we bought and sold 8 houses all in the same day last week. Mm-hmm. In fact, one of those went to a new client. So as you know, I do these webinars with other folks out in California, and I did one, and I saw someone on the webinar who was asking some really, really smart questions, and then sent some follow-up emails to Jamie, our sales director that I was copied on. And I thought his phone number was on the bottom of his email page, and I thought, this guy has me curious. He was really engaged. Mm-hmm. So he asked all these questions that I didn't know the answer to. Our sales staff does, but I called him anyway, and I just wanted to hear his story. I was just curious about him. And he is selling, I believe he lived in these condos and moved up, and then would keep them. That part of the story I'm not 100% sure on, but these are retail level condos. He's selling them in California right now in the retail market and moving the money into these investment properties. So you can win really big right now both ways. You can win by selling what you have. If you have some retail stuff out there, or even say you kept your old house that turned it into a rental, now's the time to sell that stuff that's in the retail sector and move into these investment properties. Because really the only deal that you and I feel that's out there are these properties in that 150 range, wherever you buy them, whether it's from us or any other Midwestern, market. They're out there, and they still are less than the cost to build them, which is
very important.
Very important. Also, if you look at a lot of the charts from these markets, if you just draw a line at say 4% from 2005 until now, if you average it out basically from 2005 till now, we're still at that 3 to 4% appreciation, meaning it's not like we're in a giant bubble here. We're just pretty steady. It just happened to go down
and interesting then back, point.
Back a little sharper. Mm-hmm. So in other words, we've made up a lot of lost time in these last few years, but fundamentally, we are not at crazy prices still. Obviously, a $150,000 house can get you a beautiful starter home in a great neighborhood. How can that be fundamentally flawed? Right. It's just not. And that's not to say there isn't risk or it can't go down, but at its fundamental core, it's still value no matter how you cut it.
Well, even in the Great Recession, it's not like we saw $1,000 a month rental go to $600.
Right.
Or even $800. I would say even during the Great Recession, a move on $1,000 a month rental, which our average is probably pushing $1,300, but $1,000 a month rental during the Great Recession, $950.
Yeah, I was going to say,
$975, or didn't move at all.
I don't know that there was much movement there, which is a great. If you can hold on to your house, which goes back to the reason why you put for rent signs out there for all your clients that you were doing flips for. It was still fundamentally sound as a rental.
Right.
And it doesn't matter in some ways what the property is valued at, because that's just a number on a piece of paper. It only matters when you're selling it. So if you own a home and it's bringing in $1,000 a month, rents, and you paid say $90,000 for it, who cares that on paper it says it's only worth $60,000 now? In 10 years, who cares when it says it's worth $150,000? None of that matters. You're making $1,000 on your initial investment, and that's all that matters.
Correct.
If you're buying for long-term cash flow, which most of our clients do.
Which speaks to, I listened to a thing of Robert Kiyosaki this morning. Like he doesn't really pay attention to the values of like his real estate. It's what it brings in. He's not a very big cash guy, period, because he says it's all right. Fake money and the government, which it's a little bit more extreme. you listen to him, you feel like he's going into, Starbucks and dropping a coin of silver,
right.
On there to pay for his latte.
Right.
But anyhow, I just believe in, if you're in it for the long term, like you said, it doesn't really matter as much. We're not going to see those rent levels, plummet.
Unless they do what you and I do, which is when the stock market falls, we get scared and sell. And then when it goes up, we're like, oh, it's great. Let's buy.
When it comes to the stock market, I like
you like to sell low and buy high.
Sell low and buy high.
It's so emotional based. But as long as you don't do that, we joke. We literally have done that, but we joke. But as long as you don't do that, this buying for cash flow works.
Well, and that's why I love real estate a hell of a lot more than I love the stock market. It's so much more set it and forget it.
Right.
I don't like seeing my money go down 40%, 50%, 60% like it did in 08.
Right.
I mean, it's hard to watch. I'm leveraged a lot more in real estate now than I was back then, but I still got a lot in the stock market. Do I worry about what's going to happen with it? Yeah, I do. Dow Jones is up over 34,000, and it so just I think that there's some rough days ahead.
Yeah.
Retail is still taking it on the chin everywhere. I think commercial real estate, like strip malls, things like that, have got rough days ahead. And that could be something that once you start seeing the commercial numbers, hit the floor, that could leak into the entire economy.
There's some issues with our economy that are fundamental to its core. When you look at 50% of folks not having enough money to pay for a flat tire, if they get a flat tire in their car, there's some issues. There's some major issues.
It's crazy.
The wealth gap is continuing to separate, and that's not a good thing. I don't care if you're a socialist or a heavy capitalist. Either way, everyone should be concerned about some of those things. So we don't mean to be all doom and gloom. We're just trying to be real, which is, now is the time to sell if you own a home and want to. Now is not the time to buy a home for yourself if you're going to move into it. It's just overpriced. And now is still a good time for investing in rentals of that starter home variety, because they just happen to be uniquely priced well still in this market. And so we don't know how long that will last. We hope those don't go up too high, because that would just mean that gravity would pull them back down again. Right now they're on a fairly steady, they're hard to appreciate too fast because of the nature of just the appraisal system. Let's just put it that way. But, overall, we still see a lot of value in them. We're still acquiring them. We are buying everything we can. So we're putting our money, obviously, where our mouth is with these. We definitely have clients who see the same things we see and are snatching these things up as fast as they can, because in some ways, they feel it's the safest place, for their money right now in these market conditions.
I agree.
Yeah, and I agree, too. There's risks in everything. I always want to point out, but we feel like it's about the safest play you can make in this real estate market, in the market in general. Bitcoin, the stock market, all of those things. Right now, we see these individual single family homes, the starter home price point and the 150 price point across the nation as being the place to go. So we are worried. We believe it's a bubble. We believe it will pop. We don't know when. We don't know what will be the precursor to that. We don't know how much it will pull back, but if you want to be positioned well for that in real estate, we believe in this very specific product, which is the starter home price points in between 100 and 200,000 in any market that you go in. We believe you should stick with middle America markets. They're more conservative and flat. Stay away from the coast for investing right now. And, there might be some random cities within that along the coast that could work. Jacksonville, Florida is one example that could possibly still work, but just as a general rule, most of the middle America cities will work that have good cash flow, and we think stick to those. And now is a buy time, despite it being a sell time for everything else.
I think it just speaks to, we talk about boring a lot, and we try to really, really build a business in the box that's really boring for our customers. If you have Bitcoin questions, do not call me. I do not want to talk to you about Bitcoin or Tesla stock or cloud technology or any of that. If you want to talk about a really boring house in a nice neighborhood that is going to provide cash flow, we would love to talk to you. I'm very old school, so whenever we talk about some of the stuff that happens in today's day and age, I shake my head like that and just what happened? I don't get it. But if you do want to talk about guns or anything else, Scott's line is open as always. But been a fun topic. Is something that we are watching very closely. Like we said, we believe that the bubble is going to pop. When's that going to happen? That's still up for debate. But until next time, we are the Homeboys. Join us the next time and hit subscribe. Happy investing.